Good morning, everyone. Good morning, everyone. It is Monday, June 22nd, 2026. It is so good to see you all this beautiful and awesome Monday morning here in Austin, Texas. Hope you all had an amazing, excellent weekend. Hope all of the fathers were celebrated well and all of the, that y'all had a good time. Had a great time this weekend. Had a great time this weekend. I'm in a really good mood this morning. It's a good day to be alive. Every day is a good day to be alive. Want to remind you all that we are not having a Wednesday and Friday meeting this week because I will be traveling to the beautiful city of Toronto. Leave tomorrow morning at 5 a.m. That's when the flight departs. So I've got to be at the airport at 3:30 in the morning, which is just awesome. Got to wake up at like 1 a.m., So I will be gone. That is the last big tournament of the season until the kiddo boards a flight and heads over to Chicago area. That's where she's going to be living. But this is the last really big tournament that I'll be taking her to. So pretty exciting. And yeah, it's a long time. I don't get back until I think like Monday. But it's an awesome tournament, really cool, televised in Canada. So it's going to be really cool. But that's the update. No meeting on Wednesday, no meeting on Friday, but I'll keep on updating everything. Update the stats, review contracts. And if you have any questions, always feel free to give me a call. You know the drill. These are basically semi-work trips for me. And that's the update, you all. Lots to go over this Monday morning. You can see behind me that we are up 3.9 basis points on the 10-year Treasury because, you know the drill. Right? It's like, agreement on Friday. It's like, yeah, let's just wait and see. If you look at the recording from last week, what did we say? Hey, apparently there's going to be some sort of an agreement between the USA and Iran on Friday. And we're like, yeah, let's just wait and see. And well, there's no agreement, right? Bottom line. So bond market is up today. Not the most consequential day when it comes to the bond market. We've got some commodity data. We've got two auctions happening in the next 22 minutes, a 3-month, 6-month. But today is more of like a green day apart from geopolitical and global news headlines. It shouldn't be a big deal today as far as the bond market. The only reason it's up is because this apparent agreement that didn't happen, right? So I guess a memorandum of understanding was signed, but it didn't happen. Tomorrow, we've got ADP employment change. We've got some manufacturing data that's going to be released tomorrow. On Wednesday, we've got building permits, new home sales, some oil data. We've got what's called the Fed Bank stress test result. And what that is, they just see how economically viable banks are. That's going to be released at 1500 hours, which is 3 p.m. That's going to be on Wednesday. And then on Thursday, we've got inflation. So the big day is going to be Thursday. That's going to be PCE, personal consumption expenditure. So Thursday is going to be a really big day for rates. What is going on with the actual consumer inflation? And then you go into Friday, and we have the University of Michigan consumer sentiment, consumer expectation, inflation expectation. So the big days that ought to move the bond market, it's going to be Thursday and Friday. If we have better than expected PCE numbers, we can expect the bond market just to improve, and therefore we can expect rates to improve a little bit. And if the numbers are terrible, if they're bad numbers, and of course, we can expect more pressure within the bond market. So where are we with rates right now? It did go up since Friday by 1/8. So we're back to the 6.625 range on the 30-year conventional. 6.625. So 6.625, 30-year conventional, 6.25, 15-year conventional, 6 1/8, 6.125 FHA, 6.25 VA. So that's what rates are looking like. A little bit higher than they were on Friday by 1/8. That's where we are when it comes to rates. The big one is going to be Thursday, so be on the lookout. You're going to receive an email from me on Thursday as soon as the PCE numbers get published so we can see what to expect. And that's going to be at 07:30 a.m. on Thursday. So make sure that you are subscribed and you have an account on the internal Team Price Facebook group, because that's usually where I post screenshots of what's happening within the bond market. And then if I'm able, I will send you all an email with that information. So that's going to be your economic update for the week. Big day is going to be Thursday. Things are going to be amping up until Thursday. The big number is going to be PCE, personal consumption expenditure. Let us update the single best leading market indicator when it comes to the absorption and incoming inventory into the Austin market. Keep in mind that we are looking at the 6-county area: Travis, Williamson, Caldwell, Burnett, Hayes, and Bastrop counties. First thing we're going to do is we're going to go backwards in time a little bit from the 8th to the 15th, and we're going to update the active under contract along with the pending. This number is going to go up to 631, and that's going to be the active under contract goes up by 1. The pending side of it goes up to 405. Now, let's go from the 1st to the 8th. That's going to be 502. Let's go from the 25th to the 1st. That's going to be 561. That stays the same. 539 stays the same. 584 stays the same. And then 569, that stays the same. So now we can start updating this week. Keep in mind that this information will be updated tomorrow morning. So tomorrow morning, you're going to receive the latest and greatest new price increase, price drop back on the market. And then we will continuously update the active under contract and the pending, giving us the total. And then we simply divide the total properties that were absorbed by the market, and we look at the ratio between that and new properties entering the market. If the ratio is 1, that's the perfect market equilibrium, meaning inventory neither goes up nor down. 1,000 listings come on the market, 1,000 get absorbed by the market. When the ratio is less than 1, the lower the ratio, the cooler the market. So in the case of 2 weeks ago, the ratio as of now stands at a 0.67. So 1,000 listings came on the market and 670 listings were absorbed by the market. Now, because 1,324 plus 228, that comes out to a total of 1,552 listings came on the market, and 1,036 listings were absorbed by the market. That gives us a plus of 516, meaning inventory grew by that amount as the ratio between what came into the market and what was absorbed by the market. Now, that does not mean that the number of active properties increased by exactly 516, because you do have expireds, you do have withdrawns, but this is a really good indication of pure supply and demand, not rejects, incoming supply divided by outgoing demand. So what is this red dot? That red dot means that the ratio this week, this week, underperformed the same exact week last year. That's what that means. And we've been on a tear. We had 14 consecutive weeks where the ratio improved year over year. And now we are in a situation where for 3 weeks in a row, the ratio is underperforming last year. And we're going to look at the raw numbers here shortly when we click on the next tab that compares this week and then last week with the year over year. But let us start by taking a look at the number of new listings entering the market between June 15th and June 22nd. That's going to be 1,116 new listings. Price increase, we're looking at 190. Price decrease, we're looking at 1691, 90%, a little bit bigger than the 89% that we had last week, less than that 91% 2 and 3 weeks ago. Let's take a look at back on the market. That's going to be 203. 18%, a little bit more than the past 2 weeks. Now let's take a look at active under contract. 412 And now this is where I need 5 guesses. I need 5 brave Team Price souls to guess the number of pending properties over the past 5 days. We all know that this number tends to be a little bit on the low side whenever we're updating this information first thing Monday morning, so keep that in mind. Seth is going to start us off with exactly 200. That's a good guess. And we've got 1 down, 4 to go. Let's just get a few more people to guess. We've got Christina coming in at 222. We've got 2 down, 3 to go. Let's go ahead and get 3 more people to guess. We've got Sonia coming in at 222. Yes, Sonia has consistently gone for the 320 or 222. Okay, we've got 3 down, 2 to go. So go ahead and just get on your keyboard and give me 2 more people. 2 more people to guess. We've got Violet coming in at 212. Everyone's starting off at 200, which is encouraging. 212. Okay, we've got 187. Ryan's like, okay, I'm going to be a little bit more on the bearish side of things. We're going to go at 187. And Violet, you almost won. 211. I'll take that. 211. Now, starting off a little bit on the slow side of things, here we have, where were we last week? Let me go ahead and pull up the Monday recap that I emailed you. And what was the number last week? Just give me 1 second so I can pull up that email that I sent out Monday so we can see exactly where we were on the Monday recap. Last week, after we updated the data, we were at 0.45 and we were at 188. You're right, Seth. We're at 188. So that's good. We're at 188 pending, 444 active under contract. So we, of course, we're trailing the active under contract. Last week it was 444. This week is 412. Last week we're at 188. Right now we're at 211. So that's good. That's not bad. I like that. I like the fact that now number-wise, last week we were 632. Now we're 623. So we're down 10 less properties going pending, same exact time frame that we were updating this data. But we had 1,216 listings that were new to the market. We closed that week at 1,324. So we had quite a bit more listings entering the market, over 100. But the ratio last week was 0.45. We're starting off the ratio at a 0.47. So when you look at the pure ratio, it is better than we were last year. Now, keep in mind that new price increase, price drop back in the market will lock at 11:59 p.m. So when I pull this data tomorrow morning, those numbers will be locked. It'll never change again. Both active under contract and pending will continue to go up. For example, the week before it was 1,026 and now it's 1,117. Last week, we started off at 632. It's now at 1,036, and it'll settle probably closer to 1,050 to 1,060. But the ratio is still underperforming. We are now officially 4 weeks in a row where we are expecting the ratio to underperform. This is the weekly residential year over year. And we can see that the ratio down 0.8%. End of May, down 5.2, down 4, and so far this week, down 33. Last week, the ratio was down 35. We're starting off down 33. 2 weeks ago, the ratio was down 12.8. Now it's down only 4. And that's just how many new properties go under contract where agents never updated the status. And then a week later, 2 weeks later, they go ahead and update that. So there you have it, you all. There you have it. That's going to be your week over week. Things are definitely just slightly slowing down a little bit. 4 weeks in a row where the demand, I mean, we're talking about single digit percentage, not entirely noticeable. On the pending side of things, we were positive, 67 and 5. But the reason why the ratio went negative is because the new listings were more. That's why I like the ratio, because you can look at the pending and say, hey, pendings are up 5.8% year over year. True, but new listings are up 6.5% year over year. That's why the ratio is negative. Now, so far, 2 weeks ago, the pendings are down by 40. We're going to make that up. That's going to go positive. But we're up by 40 on new 2 weeks ago. So I would say that we're actually going to go positive. I envision the comparison that this right here, that right there will actually go positive from 0.67 to 0.7. We will have a green there because agents are so bad when it comes to updating information. Let's update really quick the open house. How many open house opportunities this past weekend? I don't think we're going to have many just because of the weather and Father's Day. Oh, this surprises me. 3,043. Way more than I thought. Way more than I thought. Now, let's go ahead and start updating the monthly. First thing we're going to do is we're going to go back to May and see if we have to update any information from May. That's going to be Travis, Williamson, Caldwell, Bastrop, Burnett, and Hayes. We're going to go active under contract. That's going to be 2527. That doesn't change. We're going to go pending. That's going to be 2098. That doesn't change. Let's go ahead and start updating this month to date, new 3653 on the price increase, 554. On the price decrease, 5372. Oh, okay, interesting. 91%. Highest number going all the way back to October. So price decrease starting to creep up, starting to go up. And I know that some of the listings that I have on the market, I'm starting to see my competition starting to really cut prices down. Something that I'm experiencing personally. 1454. And on pending, oh, wow. Only 1,002. So we're at 0.58. 0.58. Yeah, no way we're going to beat June of last year. No way. I mean, we're plus 1810 right now. The difference on the plus side of things. Already plus 1810. June of last year, we ended at 1514 on the plus side of things. We're already at 1810. But take a look at the previous month. We were plus 1,400, but look at last year, plus 2,400. That's why the number of active properties, we're still lagging the number of active properties compared to last year. And I'm going to give you some predictions on the number of, let me go ahead and there we go, just had that. I'll give you some prediction on whether we're going to hit a new record high on the number of active listings on the market. I've got a percentage prediction that I'm going to give you. Expireds, we're looking at 199 expireds. Let's go ahead and compare the year over year. On active, we're down 5.9% on the number of active properties. Keep in mind that this active is the 6-county area, and then we have active for the entire MLS. On new, we're down 19.5% so far, but it is the 22nd of the month. So we have, 31 days this month? So we've got 9 days. We still have 9 days left. I would say there's a very strong likelihood that we are going to beat June of 2025 on the number of new listings entering the market because we've had new listings 3653. Let me get the calculator here really quick. 3653 divided by 31. So it's about 117, or no, actually it's not 31, it's 22. Let me go back. 3653 3653 divided by 22, 166. About 166 listings coming on the market. And when you compare the year over year, we're down by 886. So we're going to do 886 divided by 166. 886 divided by 166. That's only 5 days. But more listings come on the market towards the end of the week. Thursday and Friday are the number one. But I'd say there's a very strong likelihood that we will exceed on the new listing this year compared to last year. Now, the back on the market, we're down by 278. Last year, we're down by 270 on back on the market, which is a big number to make up, very big number to make up. But here's where it gets interesting. On the pending, we're down by 37.3% on the pending. So it looks like we're going to be positive on the new and just about flat on the pending. Flat on the pending, which means that we are going to underperform that 0.58, either come very close to the 0.72. Like that 0.58 is going to go up, we know that, but it's going to underperform. June of 2026, as of now, will come darn close, but more than likely it's going to end around the 0.71, 0.7. So we're going to have a reversal on the new listing to pending ratio. Something that, let me go ahead and just grab one of the charts here for you. Just give me some time to find that. Here we go. We had a better January, February, March, April, May. We're hoping for a better June. But as of now, I would say that there's a 90% chance that the ratio for June will actually underperform the ratio for June of 2025 by slightly, just a little bit, just a tiny little bit. And let me show you a few other charts right here. Let's grab this one. Let me format it in a way that you can actually see it. Yeah, you can kind of see that. We are new versus pending difference. So you take everything that's new on the market, you subtract everything that's pending. We are now fourth year in a row. We had a record high in 2022 at 3,051, and we're now 4 years not 4 years in a row, because 2024 to 25, we went down by just slightly from 1542 to 1514, but now it shot up. Now it's the highest one in 4 years. Not 4 years in a row that's gone up, but the highest one in 4 years. The difference between new on the market and pending. And you can see this bar chart where 2026 less than 2025, 1, 2, 3, 4, 5 months in a row, year over year, we had less added inventory being added to the market. And then we've got this reversal right here in June. So that's what's going on. Please be sure to check this entire PDF. I will update this and then I will publish it and make it available for you all. I will email you that entire PDF later on today with the Monday recap. But more importantly, tomorrow morning, you're going to get the all brand new listings back on the market, price decrease, price increase. The reason why this information is helpful is, once again, think about that listing where you're starting to notice some price drops. That's what the data is pointing to. More inventory, more competition. For buyers, it's going to increase the leverage that your buyers have. This is the macro market narrative. You always have to approach the market in a hyper-local mindset. The 78739 zip code is going to be different than the 05 zip code. Everything is hyper-local in our area, but this gives you a really good insight at the macro market. Let's take a look at the number of active listings and take a look. It is approaching that previous high of 18,146. It peaked June 30th. Number of active listings. Now, as we get closer to the end of the month, what do we notice? We notice more withdrawns, especially in the month of June. We notice more expireds. So as of now, My prediction is that there's a 15% chance that we will beat this number, 18,146. There's a 15% chance that between now and May 31st, we will beat that number. 15%, not the biggest percentage in the world. There is a 0% chance that we're going to hit 20,000. It's not going to happen because as you roll into July, the number of new listings entering the market just starts backtracking. Now, back in 2024, the number of active listings peaked July 15th. So could there be a possibility that we roll into July 1st, you remove all of the expireds and withdrawns, and then they get listed immediately in the first 7 days of July, and the market peak this year doesn't happen at the end of June. It happens towards the second week of July. That's what happened in 2024. We had a little bit of a dip, and then a lot of people decided to put their homes on the market after July 5th, 6th, first 2 weeks of July, huge increase in the number of active listings because we had a flood of new listings entering the market, and our peak active listing was July 15th. That could very well happen this year. But even if that happens, we're not going to hit 20,000. There's no way that we're going to hit 20,000, but could very well have more active listings this year compared to last year. So far, we're down by only 1.88%. The good news, though, is on the pending side of things, we are still up. We're up 8.5%. You take the raw number of pending, the snapshot of pending. Every morning, I just say, okay, how many pending properties are there? Bam, that's the snapshot. And then I compare it to that exact same snapshot this same exact day last year. And we're up at 8.5%. Now, we got up as high as 10%, and it's backtracked a little bit to a plus 8.5%. Well, why is that? Well, because over the past 4 weeks, we're having less properties going under contract in relation to that new inventory entering the market. That's the new listing to pending ratio that we just updated. So it's totally fine that the pending percentage is going to backtrack because of the data that we just went over. But the good news is that, we're up by 0.4% on the cumulative pending. And that is without us counting the next, 6 days. Still 6 days left in the month. So if another 500 properties go pending between now and the end of the month, well, then that number is going to go up by even more than the current plus 0.4. What about activity index? It's downhill from here on the activity index. The good news is that we are up 8.2% year over year. Today, we're looking at 22.1% activity index. That's going to be your pending divided by active plus pending. Last year, this same day, we were at 20.4. So it's a difference of 8.2%, which is great. On the resale side of things, we are under 20%, and it is trending lower on the resale side of things. We are still outperforming last year. We are underperforming 2 years ago. Last year, the activity index bottomed out first week of October at 18.6%. So which areas, cities, and zip codes are hot and which areas are not? We no longer have a single city over 30% activity index, but Buda is at 26.01. That is right now the best performing city out of the top 30 cities that we track. Buda is the best performing city. Manchac number 2, Round Rock number 3, Cedar Park number 4. But Cedar Park really went down quite a bit. Let me take a look at the historical activity index for city really quick. And we can see Bastrop, that just hit a 12-month high. And look at Cedar Park. 32.3% drop from peak. Now we're only up by 5.2% year over year. It's a big drop on Cedar Park from 35.8% March down to 24.2%. Big drop. We have Dale, 12-month low. We've got Elgin, 12-month high at 29.3, 14.9% increase year over year. We've got 2 that reached a record high and 1 that reached a 12-month low. Let's take a look at the activity index zip code, and let's look at the historical on that. We've got 5 zip codes that just reached a record high activity index over the past 12 months, and we've got 1 zip code that reached a record low. Let's take a look at the highs and the lows. Highs, 78734, 68.6% increase year over year. Here's another high, 78741. It's still crazy low at 18.8%, but that's a 12-month high in a 53.4% year over year increase. We've got some of the lows, 5.2. Be careful with 5.2. If you've got a listing in 5.2, that's going to be a really challenging area right now. 9.2% activity index, which is crazy low, and a 63.7% drop from peak and a 28% drop year over year. Let's look at a high. Look at 5.3 though. Look, it's amazing. 5.2, you've got a 12-month low. 5.3, you've got a 12-month high. 5.3, you've got a 110% year over year increase in the activity index. From 5.2 to 5.3, worlds apart. Really fascinating. And let's look at a few more highs and lows. Any other highs and lows? We've got Bastrop. That just hit a 12-month high. Elgin, big jump from 20% over to 29.4, big jump. So there, let's go back to this one, and zip code wise, 39, number 1 zip code, doing very, very well. Very well at 36.17. And when you look at, let's look at something else. Let's look at months of inventory. Months of inventory, Cedar Park, best city that we track at 2.9 months of inventory, 4.9, only 1.98 months of inventory, crazy. And we have 13 cities that have more inventory compared to last year, 17 lower. When you look at the 2-year comparison, 20 higher inventory and 33%, 10 lower inventory. We are forecasting shy of 3,000 properties closing this month. When you look at the cumulative closed divided by population, we're looking at a 1.8% increase year over year. And when you look at the cumulative, every single property that closes from January to June, we're looking at a 9.3% increase in pricing. Pricing is just, forget holding steady. Pricing is exploding right now. We're looking at an 8.6% increase month over month on the average sold price. Now, when you look at the month of June, historically, June's will have a positive month over month. But an 8.6%, June 22nd, that's really high. So we're going to end up positive in June, no matter what, both on the median and the average. June will be positive. Things started slowing down just a tad. When I say slowing down, you all, it's like from 70 miles an hour to 65 miles an hour. Like that's the level of slowdown. So don't let this freak you out. It is a little bit of a pullback, but that only happened in the past 4 weeks. Well, properties that are closing here in June, they went under contract prior to that. And we had a really good run, 14 weeks in a row where activity was outperforming activity last year. So that's why we got a huge increase on the average sold price, huge increase on the median price. That sucker just shot straight up 30 year in a row where the average sold price is going to outperform year over year. On the median sold price, same thing. Now, keep in mind that less expensive homes do close at the end of the month. I do expect a pullback when it comes to this, but not a massive, massive pullback. Okay. When you compare the median sold price to 36 months ago, we are down 1.09%. If today is the absolute bottom of the market, we can expect a return to peak roughly October 2029 using the 25-year compound appreciation. When you look at every single property that has closed so far this year, we're looking at 14,680 properties have closed in all of 2026. The average sold price is up 0.6%. We are outperforming on a percentage and a raw dollar amount last year. On the median side, we're down 1%. The good news is that the sold to list price ratio, a little bit of a bounce up. So far this year, out of all the 14,680 properties, the sold to list price ratio is 97.3 versus 97.1 last year. What about the top 25th percentile and the bottom 25th percentile? The bottom 25th percentile is flat at 325. No gain, no loss on the price per foot, down 3.8%. The top 25th percentile, on the other hand, is up 4.1%. And so far, yes, go for it. Who is this?
That was me, but that was my baby that pressed it. Sorry.
Oh, no worries at all. No worries at all. When you look at the median sold price, out of everything that closed so far this year, 7 cities are up and 22 cities are down. There are right now 2.6 sellers per buyer in the entire market area, and that's going to be a balanced market. We no longer have a city that would be classified as a hot market. 7 are warm, 15, exactly half, 50% are balanced, 7 are cool, and 1 is cold. On the zip code side of things, we have 4 zip codes that would be considered hot. That's going to be your 2.6, your 3.7, 3.9, 4.9, and is that it? That's it. So we've got 4 zip codes hot, 20 warm, 33 balanced, 15 cool, and 3 zip codes that are cold. The absorption ratio is at 21.18%. That is the sold divided by active. That is for the month of May. We will only update June in the last 2 to 3 days of June as a forecast to how June is going to end up. But you can see that we've had 3 months in a row where the absorption rate outperformed last year. And then finally, this is your 0 to 10 market. 10, best market in the world. Anything you put on the market sells. 0, worst market in the world. You can't give the sucker away. We've only had 1 month where the market was a 0, and that was January 2009, right after the great financial crisis. And we've had a number of months where the market was 10, 6 to be exact. Right now we're at 5.6. So there's that balanced normal plus market at 5.6. The historical average is 6.55. So a little bit lower than the historical average, but I'll take a 5.6. Anything over 5, we're just on that balance plus market. The good news on this is that we have outperformed last year 4 months in a row. That's exactly what we are looking for. The big question is, are we going to outperform 5.34 for next month? This is the chart that I am obsessed with this next 45 days, because this is going to show us, is this market recovery a real recovery, or was this the whole dead cat bounce recovery where it just stalls? It's like we're picking up momentum. It's looking good, and then it stalls going into the slower season for real estate. As of now, hard to tell. We're just going to have to wait until the data gives us this number. The 4 week in a row where the new listing to pending ratio is now backtracking last year, that certainly puts a little bit of a cool down when the momentum that we've seen over the past 14 weeks preceding that. But the number that I'm obsessed with, that is, it takes everything into account: active to sold ratio, demand, market absorption, days on the market, sold to list price ratio. Every data that we put together gets averaged and normalized into this 0 to 10 scale. And this is proven to be spot on historically. If we underperform June of last year, that means that we're still in a recovery mode. It's just not accelerating. Then if we then start backtracking 2-3 months in a row, well, then we cannot call that a recovery. It's a stalled recovery. Now we're entering back into a market correction. So that's where we are with the overall market right now. The good news is that we are outperforming the pending. So that's the good news. The good news is that we're not going to reach the 20%. But we are noticing buyer demand backtrack a little bit. Is it because of rates? Is it because of geopolitical tension? A lot of those factors could be at play. So all we can do is trust the numbers and look at the numbers. Which do you think it is, recovery or stall? Recovery. I'd say that if we stall, it's going to be like a 2-month stall, like a 1-month stall, just a little bit of a slowdown. We'll just bring up pricing just a little bit down. Like I actually don't want to see an 8% month over month price increase. That's actually not healthy for the market. So if some people are like, oh, wait a second, multiple offers, what are you talking about? I'm not submitting an offer anymore if it's multiple offers. That in and of itself will just stall the market a little bit and just allow the pricing to go up at a really nice, sustained 2.5% to 3%. I want real estate to be boring again. That's what I want. Whenever people talk about real estate, like, oh, yeah, prices went up, 2.5% year over year, 3% year over year. That's what I want. What's a healthy real estate market? A boring real estate market. When everyone stops talking about real estate, that's when you know you have a really healthy market. When you have your average seller, your average buyer saying, hey, I'm thinking about upgrading. Okay, great. Well, let's put your house on the market. It's going to sell in 60 days and let's go shop for a house and we can do a contingency. And it's just really boring. That is the sign of a really good, nice, healthy market. So if anything, a little bit of a stall will contribute to that. I do not want to see this. This is not good. An 8.6% month over month increase is not good. It's not good. Now, the other thing that we have to keep in mind is look at October. October had an 8.6 month over month increase. And then what happened over the next 3 months? Eroded. All of that was gone. All right, we had a 5.1. Oh, that's a little bit on the high side, month over month, a little bit on the high side, and it kind of kept on going. So if the stalling of the market is a 60, 90, 120 day, little bit of a pullback, putting a little bit of water into this, little fire, I'm okay with that. I will actually take that all day long. That's actually the sign of a really good, nice, healthy market. Buyers adjusting real time to the condition of the market, puts a little bit more pressure on inventory. So I would say that instead of it being an accelerated recovery, then it's a little bit of a slower recovery. That's the way that I would say. It's a little bit of a slower recovery. But when you look at the permitting data, when we're so far down on the permitting data, new construction has responded beautifully to this market correction. They did not do what they did back in 2008, 9, 10, which is just continue to flood the market. Whether it's multifamily permit or single family permit, they've really pulled back. I mean, we are down by a lot on permitting. And yet we do have a really good job market in the Austin area. We've got unbelievable companies that are deciding to move to the Austin area. Big old huge hedge fund is going to make their second headquarters here in the Austin area. That's unbelievable for the area. So when you add in all of those market dynamics to it, I cannot not call it a recovery. Like it absolutely is a recovery. It's just not going. It's just going to be a actually healthier recovery as opposed to just the sucker shooting up, which contributes to an eventual crash. So I'm good with it. I'm really good with it. Personally, I'm excited about it. Good question. Any other questions, you all? I continue to be very bullish for 2026. Very, very bullish for 2026, going into 2027. What we also have to realize is that this is a very cyclical market. And when you're looking, that's why I pulled up the activity index for zip code. When you might have sat down with your listing presentation in the 78728, which is a crazy good zip code. So I sold a property right there in 28. Was it March? I think it was March. So we're looking at the February data on fire. At one point, that was the number one zip code in the entire Austin area. I saw that zip code going up and told my clients, hey, this is our chance. We sold it. Full price, multiple offer deal. We sold that. Clients are super happy. If I then had another listing that I was prepping for 30, 60 days that was coming on the market right now, I'm looking at a completely different market dynamic. We went from the hottest zip code in the area to underperforming the resale for the entire market. It's down 66.2%. So if I am still using my only 120-day memory of that market, I'm done. I'm not giving my client good advice. So this is a perfect example of a stalled zip code that happened overnight. Immediately, that zip code just stalled. So got to be hyperlocal, got to be obsessed with the market data for that specific zip code. And then we can obviously look at zip codes that are completely different, totally different. Look at the 3-2 Steiner Ranch area. Maybe you had a listing back in the 3-2 that was withdrawn or expired in July. Well, now you're looking at a zip code that has double the activity than last year. Now it's the opportunity just to give that seller a call and say, hey, by the way, we're noticing a doubling in activity in your zip code. Yes, last year was tough. This year's a lot better. So got to be hyperlocal. Very good question. Any other questions, you all? Any other question? It is 10:52 a.m. Monday, June 22nd. Any other questions? Any other questions? And by the way, if you go to Austin Metrics, if you download, not if, when you download the app, Austin Metrics, right there, you can see every morning I update that little graph right there. Can you see that? Can you see that? Look at the camera. Can you see that? Every morning I update that. Now right there, recovery. I will update this every morning I update that. Let's take a look at 3-1 really quick. Yeah, 3-1's looking really good, Sonia. Really, really good. Down by only 3.4% on the activity index. That zip code peaked last month, May, at 31.4, down only to 30.4. And it's up 63.5% year over year. So fantastic. Really good zip code. Looking really, really good. Yeah, looking really good. And then keep in mind, you all, that in addition to this, and you can access this information by going to Insight and Statistics. You can go to Activity Index Zip Code. You can also go to Market Update, Data and Analysis. And when you click on 78731, in Sonia's example, it'll give you the entire breakdown updated daily. And then right here in the bottom, it gives you a bar chart of the activity index and then months of inventory as the line chart. This is my go-to. And it gives you the price breakdown, activity index based on price, absorption ratio. It gives you the percentile breakdown along with the 30-year sold change year over year. You can see that the 3-1 market, Sonia, everything stops at over 1.6 million. So under 1.26 million, it's really healthy. Prices are going up, especially under the $1 million. Under $1 million, that zip code is just up year over year. Over 1.5, it's a lot of pressure on that zip code over 1.5. So yes, we look at the entire zip code, but then we have to drill down and see, okay, what is happening within that specific zip code? Look at the activity index. We have 43, 85, 100%. Then it drops down a little bit to 16, and then 40, and then drops down to 25. So what's your key price point? I mean, the 5 to 600 is looking really good. 9 active, 7 pending. And then, of course, we've got days on the market, months of inventory, what's sold, and then the appreciation. And this is that classic zip code that it's no longer going down in price. And it has not gone down in price for 3 years in a row on the median sold price. But it looks like we've hit a market bottom right there in that zip code 7731, here the location of the office. So take advantage of this, take advantage of these resources. You can also get all of this information on, here's the plugin, Austin Metrics. You can just click on zip code. You can click on 78731. It's a warm market right now, an overall score of 76.1 out of 100. It shows you everything that's happened within that zip code, number of sold properties, 30, 60, 90 days. New to market, 24.8% of the 117 active listings were listed over the past 30 days. Gives you pricing, appreciation, and then you can click on 7731 full report, and that PDF that I shared with you is available. You've got 3 buttons: download, share, and then open up on your browser. You can share it with clients, take screenshots, send it to clients. It is 10:50.
I have a question.
Yes, go for it, Violet.
So on the 1 to 4 family contract, paragraph 7I, the one having to do with the groundwater disclosure, the seller's disclosure about groundwater. So number 3 says seller is not required, and you have all of these things, A through E that need to be true. So if in the listing documents, there's no seller's disclosure about groundwater, and you're the buyer's agent and you're filling this out, how do you know that the seller is not aware of a water well or pond, or how are we supposed to know that?
Well, the onus would be on the seller to actually counter the contract and say, no, actually, I am aware, and here's the seller's disclosure. So you've got 3 options. Option number 1 is seller's not required, and then the seller would counter. Option number 2 is reach out to the listing agent saying, hey, what do you want me to put on this section of the contract? And, that would be really the 2 options, actually. So, or just leave it blank. Submit the offer, leave it blank, say, hey, counter with whatever it is. It's really up to you, seller. What is it?
So on the, you mentioned that all of the properties pretty much south of the river are in groundwater conservation districts. But if, like on E, it says they get water from, like the city. So that would be okay, right? Because there's no
That's
private
correct.
water, there's no well. Okay.
That's correct.
Okay.
Yeah. Yeah. And I went ahead and uploaded, let me go contracts, leases, and let me find, I think it's under disclosure. If not, I will send it to you. Let me see if I can find it here really quick. Groundwater Conservation District. I did a lot of research over the weekend on how can we best communicate with clients these changes to the contract. And I found a really good resource. Let me find that and upload it as a PDF here really quick. I found an excellent resource from a local water district that explains that form better than I could ever explain that form. And let me get that over to you. Just give me 1 second so I can put it on the screen. It's just going to take me just a second or so just to get that information. So bear with me. I was not expecting to share that today, but it is a good opportunity to share that. And that is going to be the water rights instruction. Here we go. Water rights instruction. So I found this. This is from the Lone Star Groundwater Conservation District. And it's a really good resource that we can share with our clients on how to fill out that dreaded form. So I'm adding this to Transaction Desk. I just found this information this weekend. I send it over to Seth because he had a few questions. I've got a few questions. So it gives you all the information, and we can share this with a seller when we are sharing that water disclosure notice so that the client can know exactly how to fill this out. So as of now, and I'm actually emailing Trek to confirm, but as of now, the instruction that we are getting from the water district, from this form, from all of the research that we've done, is that even if a property is located within a groundwater district, if it's like take down in Travis County, if you've got a property at City of Austin water, but it's in South Travis County, do you have to fill out this form, the seller's water disclosure? And the answer is no. It's no. You don't have to fill out that form if the property only receives, gets City of Austin water, but it happens to be in a groundwater. Okay, so because it's seller's not required because all of the following are true. Okay, well, and you're in City of Austin water. The question that I have to Trek, it's the property being located in a groundwater district. Does that mean that rights have been severed? Like, because then it contradicts like the D. It's like, well, if I know that the property is a groundwater district, do I have to research whether the rights have been severed? And they're not being clear on that. It's like, well, it kind of depends. I'm like, how is the seller supposed to fill this out? So what we're going to do is we're just going to provide this resource for the seller. It's like, hey, here's a really good information that was created by a water district. Read over this information and do you have to fill this out or not? So I do have an email that is on queue to send out to Trek just to get some guidance. And I'm going to pick an actual property. Now, the challenge is this. The last time I emailed them, really the same question. The response was, well, you got to talk to your private attorney. It's like, you guys wrote the form. So I'll still email them and I'll let you know. But this is a really good instructional form.
You said you were putting it in transaction desk. Where?
It's going to be on the listing. So the listing template. So this is just going to populate on the listing template.
Did they ever get back to you about the issues with the misplacement of information?
Oh, yeah, they fixed it. But they're not going to add in the total sales price. They said that they're not doing that anymore. Yeah. But as far as the name under notices, that was fixed. Yeah, that was fixed. Good stuff. And by the way, that form is already in transaction desk. So when you create a new listing, the water rights instruction is already there. So it automatically gets added to the documents in transaction desk. Good question. Any other questions, you all? 1104. Any other questions, comments, concerns, criticisms, or complaints? Any other questions? Going once, going twice. All right, you all, that's all I have. Thank you all so much for joining. Super appreciate it. Hope you have an excellent, excellent day. If you do have any questions, always feel free to reach out. And we will talk later on. Thank you all.